we're just starting the decline. Right? This, even if it's a correction and not a bear market, there should be a lot more coming. We'll see what happens on Monday. The Fed is not going to start hiking rates, and even if it did, it would be too little too late to do anything on moving the needle on real rates, which are collapsing. All of this is bullish for gold and silver, just that those algorithms haven't been programmed to understand that yet. But ultimately, and not too far into the future, that is going to happen because the real flows, the real money that's buying gold and silver is going to buy this dip, right? They're not trading with these programs. They're buying to own the assets, and they're going to keep buying because everything that's happening right now is bullish, which is why I would recommend, this is a great weekend, by the way, to buy gold and silver.
Markets are starting to show serious cracks, and the latest sell-off may only be the beginning. Stocks remain near elevated levels, but the warning signs are building quickly as investors react to stronger jobs data, rising inflationary pressures, and uncertainty around the Federal Reserve. Peter Schiff, a well-known economist and longtime critic of central bank policy, explains that the real story is not a strong economy, but collapsing real rates and a Fed trapped by inflation. Gold and silver dropped sharply, with silver falling below $68 and gold pulling back near $4,300. But the bigger picture remains bullish. The prediction is clear. If stocks continue falling, pressure will build on the Fed to cut rates and print money again. That would likely become a major catalyst for precious metals. He believes silver below $70 is a gift, gold has support around $4,000 to $4,100, and silver is unlikely to return near $50. This correction may become the setup before the next major move higher. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
So the Dow was only down, let me see, on the day. The Dow had a relatively good day because it was, the Dow actually finished the week slightly positive. Let me look. So the Dow Jones on the week was up like 0.115. It was down like 600, 700 points. Maybe with the futures down 800. I'm looking at the futures. They sold off after the close. But on the week, the Dow was up slightly, and it's only down about 0.6% year to date. So the Dow is holding up. The S&P dropped 2.3% on the week, almost all of it today. Year to date, though, the S&P is still up 8%. The NASDAQ down 4.6% on the day. Looking at the futures, they're down 5%. But year to date, down up about 10.7%. So still positive, even though we had this big drop. Pretty much today, a little bit yesterday, but today, the Russell 2000 is still up 13% on the year. It's the leader now on the year, above the NASDAQ. But it was down 1.9% on the week. But to me, we're just starting the decline. Right? This, even if it's a correction and not a bear market, there should be a lot more coming. We'll see what happens on Monday. Gold was down 3.3% today. Right? It was down about $145. It closed at $4,328. On the year, gold is about flat. It may be, I don't know if it's slightly down on the year. Silver was down 8.7% today. Gold is down about 0.5% on the year. I wrote it down. Silver is down 6.4% on the year, meaning before today, silver was still positive on the year. And unlike, like Bitcoin, which is way down, silver was positive until today, and now it's negative. It dropped just over $6 today. It closed below $68. I think it was $67.72. And again, catalyst being the stronger than expected jobs report, which is meaningless. But again, the computer algorithms in a liquidity-driven market, they sell everything that they believe is related to interest rates. A stronger than expected jobs number. That means the Fed can't cut rates. That means the Fed might hike rates. All of this is irrelevant because inflation is rising rapidly and the Fed is sitting on its hands. The Fed is not going to start hiking rates. And even if it did, it would be too little too late to do anything on moving the needle on real rates, which are collapsing. All of this is bullish for gold and silver, just that those algorithms haven't been programmed to understand that yet. But ultimately, and not too far into the future, that is going to happen because the real flows, the real money that's buying gold and silver is going to buy this dip, right? They're not trading with these programs. They're buying to own the assets, and they're going to keep buying because everything that's happening right now is bullish, which is why I would recommend this is a great weekend, by the way, to buy gold and silver. I think we could potentially have a big drop in the stock market on Monday, unless the Trump administration does something to prevent it. But anything they do to prevent it is going to be very bullish for gold and silver. But even if they don't prevent it, this sell-off should turn. The money should start flowing into gold and silver because what does a big drop in the stock market mean? It means the Fed is going to have to rescue the market. Of course it will. There'll be massive pressure from Trump on the Fed to do something because Donald Trump is hanging everything on the stock market. All he does is talk about how high the stock market is when it sets a record, claiming credit. This proves my economy is great, my policies are working, and there's going to be tremendous amount of pressure on the Fed. What can the Fed do to bail out the stock market? They got to print money. They got to cut rates. And all of that is great for gold and silver. So I would buy this. Silver below 70 right now is a gift. Gold is not as big a gift, but it's still, well off the highs. It was over 55, almost 5,600. So we're just barely above 4,300. The real support is around 4,000, 4,100. This is the support right here in silver. I don't think you get silver much cheaper. I don't think we're going anywhere near 50, which was the breakout. So it's a great weekend to go to Schiff Gold and buy some gold and silver. If you don't have your T-Gold account yet, go to tgold.com and buy some gold and silver. By the way, Bitcoin has diverged from both risk assets and gold and silver because gold is basically flat on the year. The NASDAQ is still up almost 11%.
The key point is that the market is misreading the situation. Algorithms are selling gold and silver because they believe stronger economic data will lead to fewer rate cuts. But in Schiff's view, inflation is rising too quickly, and the Fed has no real ability to fix the problem. Even if rates were raised, it would be too little and too late to restore positive real rates. That creates a powerful setup for gold and silver. Real buyers are not trading short-term headlines, they are accumulating physical assets because they see the deeper monetary problem. If the stock market falls harder, the Fed will likely face political pressure to rescue markets through easier policy. That means more liquidity, weaker real rates, and stronger demand for hard assets. Silver's pullback may look scary, but the long-term trend remains tied to monetary weakness. Let's get back to the interview.
Donald Trump came out and he talked about Fannie and Freddie. And he said that they're worth $1 trillion. These companies are worth $1 trillion. And of course, a lot of people own them because they expect some IPO. And Trump says they're worth $1 trillion. Right? Now, that is about 4 times what analysts claim that they're worth. And of course, they're not even worth that. I don't even think they're worth anything. And in fact, one of the reasons that I think Trump might have been wanting to come out and say that is that Bill Pulte, right, who was running Fannie and Freddie basically, he's now got him in charge of national security, right? And even though he has no experience and knows nothing about it, that's the guy that Trump picked to replace Tulsi Gabbard, who's leaving at the end of the month. Now, of course, a lot of people are upset that Trump is putting his henchman in charge of national security, and who knows what he's going to do with it, because, we know how, he was using all these mortgage records to go after, people on the Fed. Who knows what he's going to be doing with all the national security information. But Trump has appointed him just as an interim head because he knows he can't get him approved. Because if he actually tried to give him the job, the Senate wouldn't confirm him. So he's allowed to appoint him as an interim head, and he can do the job for over 200 days without having to be approved. So now Trump gets to put his buddy there to dig up some dirt. But meanwhile, that probably scared some of the people who invested in Fannie and Freddie. Hey, our boy is going to be doing something else. That means this, maybe we're not going to get this IPO. So the stocks were coming down. So then Trump comes out and says they're worth $1 trillion, and they jumped way up on the open. Of course, they sold off from that gap. I wonder how many of Trump's friends knew that he was going to say that or post that before he did, and they got long and they sold into the rally. But the stock still ended up closing positive on the day. But the reason I say that the companies don't actually have any value, Fannie and Freddie insure like a third of all the mortgages in the country. That is a huge liability. It's not an asset because you insure all these mortgages. That leaves you on the hook. Now, their asset is, well, they've got cash, they've got some a capital, but ultimately, if we have a big drop in the real estate market, which looks inevitable given the housing data and given how expensive housing prices have never been this expensive ever, even before the housing bubble popped in 2007, 2008. Houses are less affordable now than they were then. And Americans are deeper in debt. Their financial position is worse. So ultimately, we should have a bigger decline in home prices than we did then. And it's more than enough to wipe out all of the capital that Fannie and Freddie has. So in other words, they're not worth anything. And they're never worth anything to the government. Donald Trump wants to pretend, oh, this is this $1 trillion asset that I helped create that we can take advantage of through an IPO. The government is the reason that Fannie and Freddie exist because the government is standing behind all the debt. Well, the government doesn't even need Fannie and Freddie to stand behind mortgage debt, right? Fannie and Freddie could just be government agencies like the FHA. They don't have to be these separate companies. Does the FHA have all this value because it guarantees mortgages? No, it's a liability. It's not value. The only reason Fannie and Freddie have value as private companies is because the taxpayer is on the hook for the losses. That is the value. The value was the implied or implicit guarantee that Trump wanted to make explicit that the U.S. government stands behind the company. So it was socialized losses and privatized gains. That was the value in the private market, that you had a monopoly on issuing or insuring mortgages with a government guarantee. But to the government itself, Fannie and Freddie have no value. That's all nonsense. It's just the government guaranteeing debt, like the student loans. Look at all the student loans that the U.S. government guarantees. Is that an asset to the government because it's guaranteed, all these student loans? No, it's a liability. We're all on the hook. When all these student loans go bad, we got to pay for them. And in fact, Fannie and Freddie underpriced because of the government guarantee. The risk is underpriced. They don't have nearly enough capital to withstand the type of losses that we're going to have. That's why they went broke the first time, because the government guarantee, even implicit, allowed them to insure mortgages without accurately pricing them. I mean, normal insurance companies, life insurance companies, property insurance companies, fire insurance, all that, they're pricing the risk accurately because the government doesn't stand behind them. The insurance companies are underwriting their own risk, and they're pricing it right. And so the premiums are designed to provide the insurance companies with enough money. And if they don't, they have reinsurance. There's an entire industry that works. But when the government comes in and says, hey, we guarantee it, then it screws up the free market. You don't get an accurate pricing. The price is too low. Companies that are getting insurance on mortgages are getting it too cheap. That is the so-called value created by Fannie and Freddie, is that it allows mortgage insurance to be underpriced, which means mortgage rates are lower than they otherwise would have been had they been accurately priced. But you can't say that creating that is an asset to the U.S. government. It is a liability to the U.S. government. Fannie and Freddie is not this $1 trillion asset that the U.S. government owns. It is a massive liability. It's exposure for the U.S. government. It's not an asset. It's all fiction. It's fake. right? But Trump wants to pretend that we're rich because we've guaranteed all these mortgages. No, because we've guaranteed all these mortgages, we're going to go broke, right? We would be better off if we didn't guarantee any of these mortgages. The U.S. government would be in better fiscal shape if it wasn't on the hook for the mortgages, if it wasn't on the hook for the student loans, if it wasn't on the hook to make Social Security payments and Medicare payments and Obamacare payments and government pensions. Does Trump think all those obligations somehow represent assets to the U.S. government? No, they're the liabilities. They're the unfunded liabilities that are part of the $100 trillion plus real national debt that the United States has, right? The 39 point whatever trillion is the tip of a huge iceberg.
This warning goes beyond gold and silver. Schiff also points to the deeper weakness inside the U.S. financial system, including government-backed liabilities such as Fannie Mae, Freddie Mac, student loans, Social Security, Medicare, and other long-term obligations. The problem is that Washington keeps treating liabilities as assets, while the real debt burden continues to expand far beyond the official national debt number. His argument is that the government guarantee distorts risk, lowers the true cost of borrowing, and creates the illusion of stability. But when losses arrive, taxpayers are left responsible. That is why the financial system appears strong on the surface, while underneath it increasingly relies on guarantees, bailouts, and money printing. For precious metals investors, this is the bigger message. Gold and silver are not just reacting to daily jobs reports or short-term market moves. They are responding to a long-term loss of confidence in paper promises. If the Fed returns to rate cuts and liquidity injections, the next rally in metals could be much stronger than most investors expect. The pullback may feel painful, but Schiff sees it as an opportunity. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.